Hello, friends. In this episode, I would like to share with you about ideas and insights uh, on money and investments. Uh, Currently, the market is down, and there is nothing to be panicked. And this too shall pass. The Indian stock market is very much volatile, and market has crashed. And otherwise, the fundamentals are very strong in India. India's growth story is intact. The challenges have arisen because of the US and Iran war. So that is the spillover. But there are some challenges for India and other parts of the world. But overall, the economy is very strong. Everything is good. Only thing is we have to be very much careful when we invest to stock market, and especially when the markets are very down, people sell off. But we have to go the other way around. That means if you have money, you can stay invested and you can put more money if possible. So when the dust settles, what happens? You can take advantage if you have money. But the fact is that most of the people they don't keep cash, and research shows that Warren Buffett has holding a lot of cash. So very few people keep cash at their hands. So at the same time, don't borrow and invest. This is one more complicated. If things go wrong, then again it's very difficult to manage. So best thing is to stay invested, and you can balance your portfolio, and that too because we are entering the next financial year, so accordingly we have to plan, and accordingly we have to make decisions. This is about stock market, and when we invest into stock market, you have to put a little bit money into stocks, then mutual funds, then FDs, then again you have to keep emergency fund, then uh, you have to keep some money into real estate investments, then again crypto. So like this, you have to have a diversified menu so that you can get advantage. So you should have a very diversified menu, so that you can average and you can get decent returns. And on average, if you get 12% rate of return, so comfortable. More than if you get, still it's better. But it's possible for the people who are experts in the stock market. Even they can't issue any returns. So these are all my personal observations. And my personal view is that don't go for IPOs because they are already overvalued. So best thing is to go to the usually IPOs are overpriced, and when you apply for IPOs, then again the share values come down. So best thing is to go for directly invest into the market if you find that it's the valuations are very strong. Then again, you can go for you can emphasize on both the fundamental research and technical research. Both you have to blend, and fundamentals you have to be very careful. Then again, technical means it's about charts. So these things you have to keep in your mind when you make investments. Then again, when we invest into stock market, market is very volatile and it has bottomed out. It is all time down, but I think it's picking up. So there is nothing to be panicked. So only thing is you have to stay invested, and stay invested in different areas so that you can take advantage. Then again, when you can put into stock market, or you can go for mutual funds. So you can go for I would like to share from the perspective of mutual funds. You can invest into large cap, mid cap, and small cap. And large cap are basically safe. Then again, mid cap, then again small cap. Some of the small caps can become large caps in the long run, that we can't predict because we are not astrologers, but based on our gut, then various other factors, we can fairly say that some of the small cap funds can become large cap funds in the future. But you have to do a lot of research. Research is the key, and you should have a strategy. So all these things you have to keep in your mind. Then apart from that, you need to be very patient. You have to wait for the results. You can't get results on overnight. And don't go for short selling, and be careful, be rational, and don't get emotional when you invest into stock market. Then when we talk about this mutual funds, now currently there is a wave. Sometimes large cap funds are good, sometimes mid cap funds are good, sometimes small cap funds are good. But I personally believe we should go for small cap funds because the already the markets have come down, and you have to choose the right small cap funds so that you can get decent returns. There is a volatility in small cap, but you can leverage that volatility and you can make money. If you want to take a risk, so you can go for a small cap funds, and if you want to be very safe, then you can go for a large cap. Then again, it depends upon the fund manager and various other factors. So all these things you have to bear in your mind to when you make investments. And let me share with you my challenge that I had a stroke in the year 2021. For the last 5 years, I have health challenges. So my right portion of the body was totally paralyzed. I am gradually recovering. So I can't type with my right hand and I can't eat with my right hand. So lots of challenges I am having. So thank you for empathizing with my position. But still I want to share my knowledge. Sharing is caring. So I love sharing my knowledge. I don't stick to one particular genre. So whatever the ideas that flash on my mind, I upload. That too, I upload only raw videos because I am not a tech savvy. That's one more problem. I'm already 62 years old, but still I am passionate about sharing my knowledge, and I request you to consider subscribing and sharing with your networks. With gratitude.